Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, February 7th, 2020. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. One thing we talked about here recently was watching this current high right here, that high and this low and that midpoint right there. The high is 37.5. The midpoint down here is about 59.25, and down here the low is 31.81. And what I mentioned was, in an uptrending market, the best buy opportunity oftentimes is about right there, just below that low. When price comes down here, rejects, and then returns back to the mid and back to the top. At times, in a downtrending market, the best spot to watch is here for a rejection, but it's also in an uptrending market you watch here as well. And that rejection could at least return price back to a reversion to the mean type of trade, perhaps back toward the middle of that key range or lower. So right now we're seeing a push back below the key range high, 37.5 right now, 32.25, and this is on the heels here of the NFP report, which came in at 206K, better than expected there. And overall, that's led to a bit of selling pressure here on the intraday basis. But again, we'll see which way they go here, as the last couple of days have been very compressed. This is a very compressed two-day range for the ES. If it starts to break down, say through 33.20, that could open up quite a bit of weakness back toward at least 86.5, if not lower into 59. So keep an eye on 33.20 here for the ES. All right, let's take a look now at the NQ. The NQ has much more compression than the ES. This one has 3 days worth of compression. Yesterday was an inside day or very close to it. Today, very close to it. And you can see 3 days of compression. Very, very narrow 3 days. And if we were to increase, or rather decrease from 5 down to 3, oh, that went down to 4. Let's do it one more there. We can get a quantification for how narrow that range is compared to average. So right here you can see it's compressed, and it is trading 46% of average, when anything that's below 65% would be considered compressed compared to its average range. So right now, compression, the last time we saw something like that was here when you had that compressed range. It went up, then down, then back, and the increased volatility from there. Over here you had compression, increased volatility from there, and so on. So right now there's your compression. If we break down and reject, it could explode to the upside. Likewise, if it breaks up and fails at say 9,500, that could open up quite a return back into the bottom of the channel. So again, the fact that we're up near the upper end of this channel suggests that we could be overdone right now, and we could be looking at a rotation back down. But again, we got to keep an eye on things, as this market has been very, very bullish, and you got to be careful counter trend fading this thing. All right, let's take a look here at crude oil. Now, crude oil has been compressing at lows the entire week, and it's been trading below the previous week's close mostly, and also below the previous week's low. So the previous week's close here, which is also the previous month's close, 4 times, 5 days almost here, being rejected at that level and pulling back. But the market really hasn't pushed to new lows. Really, the lows were seen on Tuesday, higher low, Wednesday, higher low, Thursday. Now we're a little bit below it now, but we haven't really gone anywhere, which gives us a great range to watch. If we were to break back above the top of the range next week, say, that could open up quite an explosive move back up. So 52, above 52, above 52.5, 52.25, that would open up quite a big move, especially if today stays within this 5-day range. So again, if we go back here and quantify using our PivotBoss Advanced ADR indicator, we can come over here, click on 2 more up here, because it's been the entire week, and then we can quantify that range. And here you see, again, it's compressed, and it's likely to remain that way the rest of the day unless we take out this low for the week, or unless we take out that high. Right now we're at 58%. We could take out a little bit on each side and still be compressed, but right now we're at 58%, likely to stay within that range. Not guaranteed, but likely. And whenever we do see expansion from that range, we could go about 5.8 points at the very least. So call it, 575 to maybe 7 points of expansion. If we break to the upside at 52, 5 points of expansion puts us to the 57 level, which is the middle of that key range. That's what we've been talking about all week. That'd be a great target right in that area. If we fail down to the downside, say we break through 49, 5 handles down would take you into the 42 zone, which is the next area of support down below. So again, we got some great measured moves here in either direction. All right, let's take a look now at gold. Here's a look at gold. What you'll see with gold is that we've seen the extreme reversal pattern kind of start to play out. This thing has been trending up. We saw a heavy 2-day reversal, and then we saw the next day be a digestive day that closed higher, and then we saw price start to push back above the previous month's pivot range low. That right there is opening up day over day higher highs, higher lows, and that could open up again a retest back toward 1600 at the very least. Right now we're inside this range. It appears we're likely going to stay inside that range until proven otherwise with an upward bias. Alright, that is it for now. We'll see how this develops the rest of the day. Again, happy Friday. Please be sure to like, share, and subscribe, and I will see you in the trading room. Take care. Have a great weekend.